Okay, today I'm working out of TradingView. If you click the link below this video in the description box, you will get a promotion from TradingView. I think you get like a month free or something like that, but that's what I'll be working out of today. Hey everybody, this is Casey. Thank you for tuning in to today's video. I got a request on somebody asked me to explain like highs and lows, swing high, swing low, because I mentioned them a lot in the multi-time frame analysis that I do. And I want to show you guys what I mean and probably attempt to take this a little bit further than what I explain when I just do a regular markup. So when I say swing high, what I'm looking for is this type of candle formation. Let's see. So I got my highest center candle. I got two candles to the left that are lower and two candles to the right that are lower as well. And so you'll get some variation of this. They'll probably have wicks. They may or may not have wicks, but it's some sort of, I think of it like an arrow almost. Like this is telling me up. So that's a high. And so the low would just be the reverse. It would be a low center candle and two candles to the right that are higher and two candles to the left that are higher. That's a swing low, right? And so I look for these areas because they signal a reversal in the market. And it also tells me, signals not only like a significant reversal, but like a potential pullback. So there's two ways that you could use this. The way that I use it when I mark up the charts and I go from a higher time frame, I'm a swing trader. So I do a multi-time frame analysis so that I can know what's happening long term. And then you can use this on a shorter time frame too, or a lower time frame too. So I'll start with the higher time frame and I'll work my way down. So what I do is that high and that low that I identified or that I drew out, that's what I'm looking for on each time frame. So I'm looking for the extreme high and the extreme low, the most recent extreme high and extreme low. So I see I've got that here, and I'm gonna label this as my long-term resistance. And then I'm gonna label the extreme low as my long-term support. Because all the highs and lows are support and resistance. They're areas of where price can potentially change. Now, if I was to put a horizontal line on this, you guys will see if we stretch this across, this is a significant level because price has acted as both resistance and support here. So if I draw this out, we see, okay, right now we're in December, what is that? December 2019. That's resistance. This is resistance. Resistance. Support at this level. Support. Support. Resistance. 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 And then we're back in 2017 at this point, right? So these swing highs and swing lows tell you a lot of information about this level. So now we're in 2013. So price acted as resistance at this level and then acted as support, right? So this is significant. I want you to really, really like try to grasp this. I would advise, because it's some of the people I work with. I know initially, like, I don't want to say like this is easy because it's not, but it's not super hard. If you put a little bit of effort into following along and just trying to follow, like eventually it's all gonna click and it's all gonna make sense to you. I guarantee you it will. Even if you don't know or you think you don't know what you're looking at, right? Okay, so I did this I'm on the daily. I'm gonna drop, well actually this should have been a weekly, but I'm gonna go ahead since I'm on the daily, and what I'll do is I identify the level within my long-term resistance and my long-term support. And that's my daily. So I look for the next swing high. So that's not daily support. It's daily resistance. That's the next swing high because we had high, we had low, then it pulled back. Now I just want to put a fib on this just to see. So you had a high, you had a low. Price pulled back to a red level. And for those of you who don't follow my channel, I love Fibonacci. I think it's the best thing since sliced bread. The way I have mine set up, it gives you the entries and the potential exits. So the potential entries and the potential exits of the trade. So like here, I've got everything color coded, and I've got extensions all the way to two extensions, actually three extensions on here, and I got it color coded because I try to keep it simple, right? And this is what my mentor taught me: red to red, blue to blue, green to green, gray to gray. So 1 to 0, which is here. So if price pulled back, if price made this move, so this down move, and pulled all the way back here, I know that I'm targeting this level. So red to red, so red entries, positive numbers are entries, negative numbers are take profits, right? Entries here, take profits here. So I just did that first move, right? This down move. So price fell from 148 to, what is this? 141, 700 pips. Wow. So I would have known back in November of last year that, let's see. Oh no, it didn't pull back for real until February. So in November of last year, this move was made. In February, price pulled back to the red level, and I would have known that price was at least coming to 137.01, right? But we see with coronavirus and everything that happened in March, price took a dive, and look where it ended up. And ended up at the 618 extension, the second extension for the 618. Like, I can't make this stuff up. This is math, right? So it pulled back to a red level. The take profit was at a red level. So fibs tell you your entries and your exits. Being able to identify swing highs and swing lows, you are following market structure. It's simply market structure. That's it. So even though it might be tough to get up on the charts, like you might not feel like you know what you're doing, I'm telling you, play around with it. Just do it every day. Do it every day, and eventually it's going to click for you. So now I'm going to go back and finish marking up my chart. So I got my daily resistance. I need to identify my daily support. And looking at this, I have a swing low, a swing high. And my next major low is here. And I'm actually going to put it, so the next major low is really here, but I'm going to put it up a little bit higher, because if I grab my horizontal line and I drop this down here, I'll show you why. So you got a little fake through, but this is support. This is support. This is September 2019. Resistance. If I keep going over, I guarantee you I'm going to have the same thing. This is in the support zone. Here, support, right? If I keep going left, same thing. I'm back in 2016 where this level was support, right? If I keep pulling back, I got the same thing. Now I got resistance. So this level is a level I definitely want to pay attention to. I absolutely want to pay attention to this level because it's a key level, and I can tell because there was instance of support and resistance multiple times. So I'm going to take off the red circles and I'm going to go back. Come on, computer. All right, I think we're good now. Or maybe not. All right, now we're good. Let me get rid of the horizontal line. And then I drop down to a lower time frame, and guess what I do? The same thing. So I'm on the 4 hour, and now I'm looking for the next high and low within this, my daily report, my daily support and resistance. So I got a swing low or swing high, swing low. I got a high here. This is not the high, but this is a low for sure. And I look like, if I just look graphically, like this is too close. I can't choose this because it's like 100 pips within. That's not my low. This is probably my next most, and I take that back. This is a low. Let me see. Yeah. So I'm going to identify this as my next low. So we'll put that as 4-hour low, 4-hour support. And then I'm looking for my next high. So I got swing low, swing high, but I have a high that's higher than that. So I'm going to put my high here. We'll say 4-hour high. Or 4-hour resistance, sorry. And then I'm going to drop down to the 1 hour. I got a high, a low. My next high is here. And this, obviously, price is above the level. So this would not be a high. I would mark this as my hourly support. Look at that. Look at that. Support. Like, you got some fake throughs. But if we go left, you got support. Resistance. Like, this is it. Support, resistance. Yeah. So this I'm going to mark as my hourly support. And then this area I'm going to mark as my intermediate resistance. And I call it intermediate because it has a potential to change to support. Yeah. So what I would typically do after this is draw my zones, but I'm not going to do that because this is not a markup. This is just me showing you how to identify potential reversal areas, and bring you back to, like, this is crazy. So look, I'm just looking at this. This was my low, September. Oh, this is, what year is this? 20. That's the high. Price pulled back. It broke through. It came back and retested this area of resistance and made it support and continued up, right? So I'm just going to look and see. That's crazy. So I just did from this swing low to this swing high. This is how you use Fibonacci, swing low to swing high or swing high to swing low. And if I was like a position trader, holding trades for months, I've never held a trade for a month. I think the longest I've gone is 3 weeks, but I would have looked at this price, swing high, swing low, price retraced, came back to the 618. And then look where price ended up taking profit. Exactly. Several times price came to this zone. So price first attempted at this area. When was this? November. Then it attempted again, or it's there, not attempted, in December. 3 times. It came to the take profit zone, 140.976. And this is all from, I would have been like, okay, price pulled back. This was a year ago, so there's no. I take that back. Sorry, y'all. This was in October. So if I was looking at this long term, like, I would have been like, okay, I'm going to go ahead and get in the buy. I know price is eventually going to get to this level, right? So let's see how long it took. I entered here. I rode it until here. 50 days, 621 pips. There's a lot of movement in between. So I probably wouldn't have held anything like that. But just to show you that the fibs don't lie. I think there's a guy named that. Fibs don't lie. They don't. They tell you exactly, like, the areas and the zones that you should get in and the zones that you should exit. So now I just want to demonstrate on a lower time frame how you can use this too. Because it's the same thing over and over. Like, you don't have to know how to mark up a chart in order, like a higher time frame analysis, in order to be able to use fibs. You know, when you have the direction at which the market is going, this tells you, like, this to me, if I didn't know anything else, like, structurally, this to me is a bullish move. Okay. So I would take my fib from the swing low to the swing high. I got a pull back to the 618.50 zone. I would have said, okay, it's pulling back here. I take profit at 141.18. How do you know that? My cousin always, when he was first learning how to use Fibonacci, how did you know price was going there? Fibs, man, fib. This is all math. You don't have to know much of anything else. So I would have said, okay, I know price is coming to this level. I probably would have put my take profit just before. And then once I got that actual break of the trend line, I probably would have had a tight stop loss because I had enough signal to know that this is going up. And I don't need to have a huge stop loss on this. This is 311 pips. All because you know that these are your entry levels, right? Let me type this out. So positive numbers. Potential. Let me put potential because some of y'all would be like, I used that. It didn't work. So I got to be real specific. These are potential entry levels, right? Let me make it big. And can I turn this? I think I can. All right, so let's see. Oh, maybe not. I thought I could turn this. Anyway. Trading view for real? Let me double click this. Maybe. Oh. Okay. Well, your positive numbers. So your positive numbers. This is what I'm talking about when I'm talking about positive. These are your potential entry levels. You're just waiting to see how far price pulls back so you know when to take profit. So you measure it from your low to your high, your swing low, that 5 candle formation we talked about. The low center candle, 2 to the left that are higher, 2 to the right that are higher. That's the swing low. You measure it from your low to your high. You got to pull back. It came to your 618. I know my take profit is going to be at 141. So I probably would have did like 140.90 or something like that. Like the fibs are the truth. Your negative numbers are your potential take profit. So I'm going to do this. Negative numbers. Negative numbers on the fib are your potential take profit. So I'm going to put this in a different color. All of this, take profit. And even the extensions that I have listed above that you can't see right now. Take profit. Like it can be as simple as you want it to be. It can be as simple as you want it to be. So depending on how far price moves, to your retracement zone will dictate your take profit. This was a great setup. I don't know what I was on hiatus. I needed a woosah, so I didn't trade for a little while in December. But this was great. This was awesome. Awesome. You don't need a multi-time frame analysis. Well, you do. I take that back because it'll tell you how far price could travel. So that you're not sitting in the trade thinking it's going to go higher than what it's supposed to. But it could be as simple as this. Simple. I'm on the 30-minute chart. Let me go down even just a little bit more so I can show you. What you're learning with swing highs and swing lows is market structure. That's it. That's it. All right. I'm moving slow, y'all. Okay, so I'm going to go down to the 15-minute. I'm looking on a lower time frame. Actually, let me see. So I'm going to take just this down move right here. So after this move would have been made, I take that back. Yeah. After this move would have been made, so let's say this whole move was made, price pulled back, it rejected out of this area. It hit my blue level, right? So let me point out. It hit my blue level. Oh, that's ugly. I'll circle. It hit my blue level, right? Price broke through, came back, retested this level at 23.6. I know, blue to blue. I know my take profit should have been set around a 23.7 and in between the 1.8. Knowing nothing else, I know that this level, this is an important level. So this would have been what? Let's see. Almost 100 pips. That's 85 pips. That's just off of a break and a retest. It broke through the support. So look, if we look left, if I'm just looking at support and resistance, this is the way I used to trade when I first got started. I drew lines across the chart and I would just do breaks and retests. So price made a down move. This is a swing high. Price made a down move. Then it formed a swing low. So I measured down with my fib. It broke through. It came back up to the 23.6 level. This would have been, once it formed that high, this would have been my entry. Okay, I'm going to enter here. And I know I'm going to sell off at least to the 1.8, ideally to the negative 2.7. That's where price is going. 85 pips right there, right? So understanding and being able to identify visually, like you can use a fib to point out significant levels to you because that's all the fib is. It shows you potential reversal zones. But being able to visually identify these levels is huge. It's huge. You don't have to be a master trader. You don't have to be a professional. You like, all you got to be able to do is to know how to measure swing highs and swing lows. Make sure you set your fib up correctly. If you do not know how to do that, you'll want to make sure you check the link in the bottom of the video to look at my Fibonacci, how I have mine set up. There are different ways you could do it, but what it ultimately boils down to is math. That's it. So anyway, I hope this was helpful. If you thought it was somewhat beneficial, please make sure you go ahead and give the video a thumbs up. Also, if you're looking for a place where we do more analysis like this, you want to make sure you go ahead and subscribe to the channel, and then also check the link below to join my no-cost Forex mastermind group. We get together like every other week and we just mark up charts. It doesn't cost any money. It's free. You're welcome to join. I'd love to have you. Yeah, all that good stuff. Let's do 2021 right, y'all. Like, I'm looking to just build a like-minded group of people who are about trading, like, yeah, just really about it. So I hope that you will check us out, and I look forward to seeing you on the next video. Also, if you're having issues with position sizing for your trades, you'll want to make sure you go and click the link below. I have a calculator I created for myself that has been beneficial, and I just share it with everybody at this point. So anyway, I'm gonna stop talking. Let me know if you liked the video, and I will see you guys on the next one. Have a good Sunday. Bye.